In our next discussion, I'd like to welcome Wayne Fuller and Andreas Muntingh. Our discussion is on withholding taxes in Africa, exchange control in Africa, and I'm not sure who came up with the phrase African aversion to tax treaties, although I'm not going to challenge that. Andreas is a tax manager at Chopra Checkers, and Wayne Fuller is a senior international tax manager at Old Mutual. Who's going to speak first? Andreas, over to you.
Thank you, ladies and gentlemen. It was Keith who came up with the phrase. I just want to tell Charles, for one, I'm BEPS'd out, so you won't hear a word from me on BEPS this afternoon. Okay, what I would like to discuss this afternoon is regulatory approvals within the context of a multinational enterprise and related party transactions, some sort of broader transfer pricing context, reduced rates in DTAs, and then Article 7, the business profit article. Now, just to paint the background picture to what I will be discussing this afternoon is, let us assume that we have a South African company that has got a subsidiary in Angola, Nigeria, Malawi, could be Tanzania, or wherever, and this company sells stock to its subsidiaries and charges fees for admin support services, technical services, royalties, and charges interest on loans. Now, let us assume that the company has done its transfer pricing work and all these fees have been benchmarked at an arm's length price, and now come here and it wants to raise invoices to make payment. Now, what I mean with regard to regulatory approvals refers to any form of control exercised by a government authority which restricts payment to non-residents, either in part or in full. And the most common type you'll find is exchange control. And central bank approval is quite common in many African countries, for example, Angola, Malawi, Mozambique, and Nigeria. Now, in Angola, they particularly strict with regard to exchange controls. And in respect of loans, you need a certificate of capital importation. When you want to pay for stocks, you need a DU, or importation of stock certificate. And certain service fees need to be pre-approved by the Central Bank of Angola. Without central bank approval, they will simply not allow you to make payment. And my advice is always get a good bank to help you. It makes all the difference. With regards to technical management services, if it's in excess of $10,000, then you must get prior approval from the central bank, and also a certificate from the Ministry of the Economy, and proof of stamping of the agreement on the contract database. It has to be registered on the CNOC database as well. Without that, they will not allow you to make payment. Now, a different permutation to this is, for example, in the case of Nigeria, where you've got the National Office for Technology Acquisition and Promotion, or NOTAP. Now, NOTAP approves fees for services and royalty payments to non-residents, and they can block payment. When you submit an application to NOTAP, you have to provide them with projections of your sales and profits for the next 5 years, your training plan for your staff, the number of employees during the last 5 years, as well as next 5 years. And if they are then satisfied, in Abuja, they will give you an approval certificate for 3 years. But NOTAP is empowered to, for example, reduce a royalty from, say, 2% to 1% or 0.5%, despite the fact that you can show them you've done your benchmarking study. So it is within their power to reduce that fee. In the case of admin support services, we've seen that they can, if you charge on a cost-plus basis, they can reduce it then to, say, 3% of profit before tax. So if you're in a growth phase and project losses for, say, 2 or 3 years, you will actually get nothing. Now, something that popped up lately is currency shortages in Nigeria. And I think it arose as a result of the fall in the oil price. But from 23rd of June,